I'm Emma Chandra and you're watching Bloomberg Technology. Let's start with a check of your first word news. The search for 10 missing sailors lost after the USS John McCain collided with an oil tanker near Singapore continues. It's the second collision involving a US warship in the Pacific region in 2 months. The Navy has ordered a wide-ranging investigation. The Washington Post reports the Secret Service only has enough funds to protect the Trump family until the end of September. That's after a USA Today report that more than 1,000 agents already hit salary and overtime caps meant to last till the end of the year. The Post says if the caps aren't lifted, agents will be working overtime without pay. Louisiana Congressman Steve Scalise says a date hasn't been set yet for his return, but when he does report back, it will be on his doctor's recommendation. Scalise participated today in a conference call with fellow lawmakers. He was shot by a lone gunman who opened fire during a congressional baseball practice. President Trump is expected to announce a troop increase in Afghanistan. He's been working with advisors on a coherent strategy for America's longest war. NPR reports as many as 4,000 troops could be dispatched. Trump is expected to make an announcement later today, and you can watch his speech on Bloomberg television at 9 p.m. New York time. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg Technology next.
And this is Bloomberg Technology. Coming up, the growing disconnect between Silicon Valley and Washington. The two sides can't seem to find common ground in the Trump era. Our deep dive into the lobbying landscape as tech looks to bridge the gap. Plus, a new game but familiar face emerges as the front-runner in the search for Uber's CEO. Why ex-GE CEO Jeff Immelt could be the one to take the wheel at the ride-hailing giant. The once-in-a-lifetime, out-of-this-world event that unfolded right before our eyes. We have all the details from the first total solar eclipse to cross the U.S. in 99 years. First, to our lead, the growing rift between the tech industry and the political establishment. Since President Trump took office, tech leaders and the White House have butted heads on several fronts, from immigration to climate change, and most recently, the policy around hate speech and hate groups after the events in Charlottesville, Virginia. Now, Washington has grown even more critical of big tech firms over their size, their hiring practice, news content, and it could have far-reaching effects on key legislation as well as regulation moving forward. Ben Brody covers lobbying for Bloomberg News and wrote about this topic. He joins us now from New York, as well as Michael Wolff, CEO and co-founder of Activate, a tech and strategy consulting firm. Michael has served on the board of several companies, including Yahoo, and was formerly the president of MTV Networks. Ben, though, I want to start with you. You start out your piece by talking about Google, which, of course, once had President Obama's ear, but has since fallen from grace. Let's take a look at the Google example in particular. How has Google's position within Washington changed?
Well, I think that we mentioned some of these cultural issues here. The ban on trans service members in the military, immigration issues, the travel ban to majority Muslim countries. These are places where the administration and the company have clashed in a very public way. And of course, those kinds of clashes, they do have, policy consequences, especially in this administration where loyalty is a big deal. There is not a lot of love lost, I think, between some of those companies and, the White House, especially given the events in Charlottesville more recently. But I think it's important to realize that there is a policy dimension here, too. Issues like privacy are on the table. Issues like net neutrality are on the table. And more, Washington is looking to take them on. And either we don't necessarily know where they're going to go, or it sort of seems like tech may be kind of losing in them. And so there are a lot of ways in which these companies are kind of being surrounded right now.
And obviously, the Trump administration hasn't had the best of luck in pushing through its policy initiatives. But Michael, the fact that Congress and the White House are considering tax, energy, immigration reform that is very important to Silicon Valley, and the White House is clearly not on the side of Silicon Valley. How much of a concern is that?
What you have is a divergence of values. You've got Silicon Valley, where there are a number of things that are very important. Net neutrality, some of the things that were just mentioned, skilled immigration, and you've got the gender issues. But more broadly, we've got things that are important to tech companies, and one of them is consumers. And these are companies that have hundreds of millions of users, and they're very afraid of some sort of consumer activism. And so they want to focus on their values. They're willing to bend their values when it's things that are important to their companies. And so two examples are upgrading the government's infrastructure, where there are going to be contracts for each of these companies, and other things like tax reform, because many of them want to repatriate foreign earnings.
So, Ben, Trump had that recent tweet about Amazon where he said Amazon is doing great damage to tax-paying retailers. Towns, cities, states throughout the U.S. are being hurt, many jobs being lost. Are we getting to a point where tech companies could ultimately end up being regulated like utilities, or at least that's the direction that the Trump administration wants to go?
I don't think it's necessarily that we are at that point yet. I think it's definitely where we are at a point where some people here in Washington, both liberals and conservatives, and I think that's what's really interesting, are sort of calling for people to look in on this. This is not, I wouldn't say, the mainstream opinion yet, but I would say that there are people who say, well, hey, look, there is a lot of market share here. There are a lot of companies, big companies like Amazon, gobbling up smaller ones, or even, medium and large ones like Whole Foods, and they're sort of saying, and Democrats are saying this as well, we need to take a look at what's going on here. I think it's important to realize as well that some of these companies are on the chopping block when it comes to these issues.
So, Ben, how have tech companies changed their approach to lobbying? Obviously, we know they spent a lot of money during the Obama administration lobbying various lawmakers. What's happening right now?
Right. Well, they're spending a lot of money, really, is kind of what it comes down to. There was some talk that these companies didn't have any Republican representation. They needed to, bring in conservatives. I think that was a little overstated. Here in D.C., big companies always employ Democrats and Republicans. But Google had, record spend last quarter in its lobbying. It spent about $6 million. A company like Goldman Sachs often doesn't even spend $1 million. And the U.S. Chamber of Commerce, which largely represents the business community of the U.S. as a whole, only about double that, not even 12 million. So they are really spending a lot of money because they know that a lot of things are coming their way, either coming or going, and they want to be a part of it.
Michael, we're looking at, potentially three and a half more years in the Trump administration, yes, at least. What are the main issues that you are going to be watching?
From a tech perspective, I'm going to be looking at any potential efforts that are about hampering these companies, because we can't stop the march of technology. Amazon, Apple, Google, Facebook, these are companies that have not just an impact in the United States, but an impact globally. So we should be wary about anything that gets in the way of their growth. And yes, they are also, they tread in politics. Jeff Bezos owns the Washington Post. And so there's a lot about the progress from tech companies that can be threatening to not just to people in the administration, but other businesses. So we should be looking at that. And also we should be looking carefully at issues like net neutrality. The paradox of net neutrality is that it's one of those places where more regulation leads to more competition. And so the tech companies, they're in favor of net neutrality because it has an impact on them. But ultimately, if the net neutrality regulations are dropped, then it's going to hurt competition on the internet.
Net neutrality is certainly a big area where we could see a shift in policy. Okay, Michael Wolf with Activate, you are sticking with me for the hour. Thanks so much, Ben Brody in Washington. Thanks for joining in as well. Well, Spotify's plans to list directly on the New York Stock Exchange are under scrutiny. Spotify aims to bypass the traditional share sale, which would eliminate underwriting fees and prevent dilution of investor holdings. The Securities and Exchange Commission met with company executives last month and have asked for further details on their plan. Coming up, Intel unveils its latest processor for PCs. Will it be enough to fend off increasing competition from AMD? And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Intel is boasting that its new personal computer chip will deliver a once-in-a-decade performance boost. The biggest maker of semiconductors says the new chip will provide as much as a 40% jump on its predecessor. New laptops built with the chip will come out next month. Joining us now from New York, Michael Wolf, Activate CEO and my guest host for the hour, as well as Bloomberg Intelligence analyst Anand Srinivasan. So Anand, I'll start with you. Would you agree with this characterization by Intel that this is the biggest jump in a decade?
Look, I mean, the performance improvement is substantial, and it's particularly notable given that this is an aberration rather than a substantial revolution in its cadence of chip improvement over time. But again, one of the things that Intel has sort of moved away from is this notion of tick-tock, once a year improvement or once a year improvement in its transistor sizing and once a year improvement in its architecture. We've gone to a tick-tock-tock strategy, and now this is a tick-tock-tock-tock strategy. So the improvements are becoming, they're coming faster for sure, but they're relatively marginal improvement. So when you consider that context, this particular improvement in performance is pretty substantial with 40%. The one thing though, Emily, I will say that this is not across the board improvement. This doesn't fit into its overall master plan of chip improvements or its roadmap per se, number one. Number two is that this is not across the board for all of its chips. So this is limited to its laptop platform. It's predominantly 4 SKUs in the Core i5 and the Core i7 strategy, sort of higher end chips, if you may. And it's important because it's a tactical move rather than a strategic move. That's how we think about this chip improvement. And it's important because it should help keep the prices on the chips moving towards the high end, which is very, very important for Intel.
So moving beyond the technical nature of it, Michael, what does this actually mean for customers? What will this new chip enable that the other one did not?
I think it enables Intel, first of all, to maintain its dominance in the PC market and the desktop and laptop market. But from a consumer perspective, what it means is the things that consumers are doing increasingly, which is virtual reality, video editing, a lot of those things that are not just consumers but prosumers, augmented reality, they're going to be much easier. And at the same time, what's happening with Intel is they're going to be able to dominate what are called the Internet of Things, whether that's virtual reality or in-home automation or self-driving cars. So it may be the once in a decade, but it probably won't be the last in this decade because the advances in technology around chips, that continues to happen, and it may be what they're saying is a push for more companies to take their chips, but that innovation will continue.
So, Anand, Intel's chips are in 80% of the world's PCs. PCs are a market that has been in decline. There have been a lot of questions about Intel's future given its reliance on the PC market. Would you agree with Michael that this chip will allow it to dominate in the Internet of Things? Obviously, the semiconductor market is a very competitive market.
Look, at the end of the day, this is also a little defensive in that AMD is now competitive for the first time in a decade. Both in the PC market as well as in the server market too. So Intel is trying to make sure that whatever it does, it corners the market on the high end. Because if you look at Intel's performance, Intel's PC business has substantially outperformed the PC unit market. So, and it has done that because it has pushed its customers to buy higher end chips. So its mix of PC chips is substantially better than PC unit growth. So again, it's pushing people towards the higher end of its market to the extent that it can develop these chips that are relatively produce an incredible amount of benefits at the high end, such as video editing, as Michael mentioned. So those are all important things for Intel to dominate and continue to drive the average selling price of its platform higher. Insofar as the Internet of Things, to be quite honest, one of the things, the byproduct of being so successful in the PC market and the data center market, where it has substantial share, is that any other place that Intel moves to, whether it's adjacencies next to its server CPUs or in consumer chips, etc., the margins are lower. So the downside of this success, if you may, for Intel is that has it been able to find markets that are as large, fast growing, and as profitable. And that's going to, even when you analyze it using this three-forked equation, it becomes a lot more difficult. But for now, it's doing really well in PCs and okay in data centers.
Okay, Anand Srinivasan there of Bloomberg Intelligence. Thanks so much. Michael Wolff, my guest host of Activate. You are sticking with me. Now, a story we are watching, Amazon continues to prove its power in numbers. The tech giant launched about 20 private label brands since 2009 and has sold about $2.5 billion worth in 2016 alone. This according to an analyst note from SunTrust Robinson Humphrey. Private labels do, however, up a tiny fraction of Amazon's overall revenue makeup. That is, the company reported $43 billion in sales for 2016. Coming up, the ongoing search for Uber's new CEO might just have a front runner. So how soon could the board vote in the next weeks? We will tell you. And a feature I'd like to bring to your attention, our interactive TV function. You can find it at TV Go on the Bloomberg. You can watch us live. If you miss an interview, you can go back to it. You can send us a message. You can play along with the charts we bring you on air. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Walmart and Uber are extending their grocery delivery partnership to 2 additional U.S. cities. The companies are expanding their services to Orlando and Dallas as Walmart battles Amazon and traditional retail rivals. The service already exists in Denver, San Jose, Phoenix, and Tampa, where Uber drivers make their home deliveries. The move comes weeks after German discounter Aldi announced it would offer home grocery delivery in Dallas and 2 other cities. It also comes 2 days before Whole Foods shareholders are expected to approve the company's $13.7 billion sale to Amazon. And an update on Uber's ongoing search for a new chief executive. Jeff Immelt, the General Electric chairman, is said to be the front runner for the vacant CEO slot at the ride-hailing company. That's according to Recode. Immelt stepped down as GE CEO at the beginning of the month. Uber's board of directors may vote within 2 weeks on co-founder Travis Kalanick's successor. Joining us now from New York, Michael Wolff, founder of Activate, who served on the board of multiple companies, including Yahoo, and was formerly president at MTV Networks. With me here in the studio, Bloomberg tech reporter Eric Newcomer, who covers Uber for us. So what do we know? And by the way, you were the first to report Jeff Immelt's name, I should say, that he was even in contention for this job.
Right. And that was back when Meg was sort of seen as the Meg Whitman was seen as the very serious candidate, and she dropped out soon after that report. Yeah, and Jeff's basically been the only sort of solid candidate since the Meg reports surfaced, and so he sort of seemed like the front runner the whole time. I mean, there's this continued fight between Benchmark and Travis Kalanick and some of the other board members. So it's hard to know exactly if someone's a front runner given the great divide on the board. But given that he's the only sort of public candidate, he seems clearly to be the front runner.
So we know that some board members like him, but it's not clear how many. Is that correct?
Right. Yeah, that's a fair assessment.
So what is it that he brings to the table that they like?
Right. I mean, I think for a long time, what did they want in Uber CEO? We wanted sort of their global operations experience, some sort of statesperson, heft, former CEO, and then someone with a tech vision. And with him, you seem to get 2 out of the 3. It's really been hard to find anyone who seems to have all 3. And I think the hope for people close to Travis is that he can continue to play that role as some sort of advisor, saying this is where we should go in terms of technology.
They're also looking though for someone who isn't going to be pushed around,
right?
And Michael, obviously you joined the Yahoo board as Marissa Mayer was coming on as CEO, so sort of how hard a CEO changeover can be.
Very tough.
What do you think is important? What do you think the biggest challenges are going to be in this particular situation at Uber?
Well, the board had a couple of directions in which it could go. On one side, it could hire a digital innovator, somebody native to the web who focused on user experience. If they end up choosing Jeff Immelt, then what they're really focusing on is sales and operations effectiveness and respectability in terms of culture. And so some of the challenges for somebody coming in is striking the right balance between what is really an internet company at its core with the user experience, and at the same time has to move into areas like self-driving cars and real operational excellence. And there's something else which is important here, which they really give up with Travis, which is this drive to work with cities, municipalities, and countries in order to allow Uber to operate. And we forget one of the things that having a founder in place is that founders tend not to ask for permission. They beg for forgiveness later. And by bringing in somebody who's an established manager from a large company, then one does wonder whether or not they're going to be able to continue to that drive and that ability to push their way into new markets and keep themselves in those markets.
Go ahead, Eric.
I want to seize on that point. I mean, it's sort of funny to hear Travis's regulatory recklessness phrased quite that way. I think there are plenty of board members right now ready to see Uber move past a period of, in the case of grayballing, potentially law-breaking, under probes.
By grayballing, you're talking about a situation in which Uber, knowingly evaded the law.
Yeah,
which isn't the only.
Yeah, exactly. And there's this Indian rape case, and there's the Waymo lawsuit that's ongoing. So I think, sure, Travis, needed to be aggressive in the beginning and pushing in regulatorily sort of hazy areas allowed Uber to be successful and, as they would say, break down the taxi cartel. But I think everybody at the company is ready for an Uber that's less worried about whether, San Francisco is going to shut down their self-driving cars or some new law enforcement official is going to come after them or they're going to get sued again. I think they're ready to put their regulatory risk behind them and want sort of a statesperson like CEO.
This game.
Yeah, go ahead. We have about 30 seconds, Michael.
Right. This game is really far from behind us. I think that we've got services like Lyft that are gaining market share in a lot of countries. Uber is either not the leading service or risks giving up that leading service. So I think it's going to require continued aggressiveness in dealing with these markets. It may be about managing against the law, but at the same time, it's going to require that.
All right, Michael Wolf of Activate, you are sticking with me. Eric Newcomer, can't wait till you have more details. Thank you, as always, for stopping by. Coming up, the solar eclipse got everyone's attention today. Even President Trump donned glasses and didn't for a portion of the eclipse. We'll talk about the excitement coming up. This is Bloomberg.
I'm Emma Chandra in New York, and you're watching Bloomberg Technology. Let's begin with a check of your first word news. Catalonia police say all members of the terror cell behind last week's deadly van attack in Barcelona are either dead or under arrest. The regional police chief confirmed 2 officers shot and killed Younes Abu Yaqub today, and authorities say the man authorities say was behind the wheel of the van. The U.S. Embassy in Russia will suspend issuing non-immigrant visas for 8 days starting Wednesday. It's in response to the Kremlin's decision to cut more than 750 positions from U.S. consulates across Russia. The U.S. will resume issuing visas September 1st, but Russians have to travel to Moscow for interviews. Iraqi forces are making progress retaking the town of Tal Afar, about 45 miles west of Mosul. That's according to the US-led coalition, which says Iraqi forces have retaken about 95 square miles from the extremist group since the operation began Sunday. President Emmanuel Macron's office has published a charter detailing the role his wife will play during his term. There will be no official budget for Brigitte Macron, nor will she be formally designated First Lady. France does not have a formal title for presidential spouses. And Big Ben will be silent over the next 4 years for repair work. It sounded for the last time today. It's the longest period of silence since 1859. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra, this is Bloomberg. It's just after 5:30 p.m. here in New York, 7:30 Tuesday morning in Melbourne, Australia. I'm joined by Bloomberg's Paul Allen with a look at the markets. Paul, good morning.
Morning, Emma. Well, it's looking a little bit weaker on the Nikkei this morning. ASX futures are barely stronger, up by just 4 points at the moment. But we may have a few earnings to drive the market today. Oil Search will be out with numbers later. And also before the open, the world's biggest miner, BHP, will release full-year earnings. We're expected to see a huge six-fold increase in underlying profit to $7.3 billion. The dividend also estimated to surge to 88 cents. And that might go some way towards appeasing Elliott management that's been pushing aggressively for change at BHP. Could have more today also on China Overseas Land and Investment. This is the second largest Chinese property developer in Hong Kong. First half profits soaring on Monday with shares up as well. We'll have more reaction on that. And elsewhere, China State Construction International will also report earnings. And we're waiting on Hong Kong CPI figures for July. That's expected to see some strengthening to 2% on year. I'm Paul Allen in Melbourne. More from Bloomberg Technology next.
The once-in-a-lifetime total solar eclipse has come and gone, and it put the U.S. power grid to the test. Grid operators, utility owners, and electricity generators braced for more than 12,000 megawatts of solar power possibly going offline. Sunrun is the largest independent solar developer in the U.S. Its CEO, Lynn Jurich, spoke earlier today with Bloomberg Television during the height of the eclipse on the East Coast.
I think the best part about the sun is that it is so reliable. So when these eclipses happen, which happen, once a generation, as you mentioned, we have a lot of advance notice. So we were really able to work with the grid operators, and were able to, procure power to meet the needs during the eclipse. And I think it's important to put this into context too. When you look at our overall traditional power sources, they go offline all the time and without a lot of notice. And in fact, annually, they will go out to the tune of 9,000 times the amount of power loss that we'll see from this eclipse. So the sun really is there, it's reliable, and we're certainly asking our customers to turn their power down and enjoy it.
So is this in a way testing how you react in an event where we have solar power as a dominant force in the provision of power generation in the country? So you can look at what the options are in terms of just switching between one and the other, because as you said, in terms of solar power, I mean, that's what the most reliable source of energy actually that we have out there.
It is, and the cost reductions have been so significant that it really is becoming the dominant source of new generation. And the segment that my company operates in, which is on the rooftop, also adds a different dimension. And we often think about renewables as all sort of one and the same, but there's a difference between the large utility scale type renewables and what we do at the home level, which is really pushing out using the rooftop to produce the power, using your electric vehicle to store the power, getting a battery on this grid. And what we're going to see is a system that will be much more reliable with the addition of this rooftop solar, the storage, and the electric vehicles. And I really look forward to that.
But Lynn, to Julia's point here, I mean, we have been talking to power grid operators and utilities and scientists that are sort of going to use this as an opportunity to test their systems, their software, et cetera. Is there anything you at Sunrun are doing during the eclipse? Are you testing battery capacity, for example? What exactly are you all going to be observing?
Well, for our customers, we have about 150,000 customers across the country, so a full gigawatt of power. And, we certainly can test to see exactly how our systems will produce during this eclipse, and we will do that, and we'll record the data. We'll also look at what the consumer patterns are. So were we successful when we ask our consumers to, bring their consumption down? Were we successful doing that? And those are important learnings. But again, because this eclipse is, an eclipse actually in any given point across the world happens once every 300 to 400 years, so it's fairly rare. And so what we're more focused on is how do we get the storage piece to be cost effective so that when there's a situation like this, we're able to, fill up the battery with the solar power and dispatch it to the grid when the grid needs it most.
Lynn Jurich, their CEO of Sunrun, speaking earlier on Bloomberg Television. Now, millions of people across the U.S. marveled at this total solar eclipse, using everything from specially designed glasses to live streams, even virtual reality, in order to catch a glimpse of an eclipse that last occurred in America nearly a century ago. One person who went outside to watch, our Bloomberg tech executive editor, Tom Giles. A whole group of you went down. What did you see?
Well, we used everything from very unsophisticated cereal box viewer, our colleague Brad Stone. I used some of those Google glasses that that I think you tested out earlier in the week. We saw people looking with their naked eye. I kind of wanted to shout over, I don't think you're supposed to do that, but you know, here in San Francisco it was a little cloudy, it was a little foggy. We're
about 70%.
Covered about 70% of the sun, that's right. A little anticlimactic here, but the thing about this eclipse, given the ubiquity of social media, when we got back into the office, you could hear, you could look on Facebook, you could look on Twitter, see the experiences of people across the country who were in the path of totality. I saw people posting photos just saying like, hey, my son just took this. It's like changed his life. You know, I was listening to people in South Carolina cheer as the sun went completely dark. So really, for some people, it had a very profound impact.
I actually did cover a solar eclipse in China in 2009 and was in the path of totality. So going to complete darkness, there's definitely this sort of magical, eerie feeling. The temperature completely cools, and you definitely heard people talking about that across the country. It was, as you say, sort of this communal moment. Even the president watched. He got a lot of flack on Twitter for looking up briefly without the glasses. We're looking at him now. He just took them off. But when he came out onto the balcony, there he is. There he looks up.
Very briefly. Hopefully he didn't do too much damage to his eyes, although people were, you can hear in the video, people down below the balcony shouting, hey, don't look. I mean, this was one of those moments, and I've seen essays about this, where this was an opportunity for the nation to come together and focus on something different, hopefully wearing glasses, without kind of the moment being upset by Washington, D.C. And yet, here's what happens. The president found a way to steal the thunder from this event as well.
Yet again, everyone had a different live stream up. NASA had a live stream, Twitter and the Weather Channel did a partnership, of course. It was all over cable news, but it was interesting to see how various tech companies, from Google to Twitter to Airbnb, actually turned this into a business opportunity.
We're able to really benefit from it. We talked to Airbnb. There were thousands of people along that path who rented their homes, in some instances for the very first time.
Right.
So they had this huge many-fold, I don't know exactly, I can't remember exactly the number, surge in listings because people were wanting to be there. And if you look at Google Maps, you saw traffic patterns acutely, you know, very red in that path of totality.
And in fact, there were some folks in Idaho who I believe spent a lot of money and it rained, and yet they were still happy about the experience. So it was an all-around experience, I guess, to commune and watch this. As you're hearing there, looking at people in the path of totality.
People throwing parties. I was on a plane recently and a guy got sidelined going through security because he had a pair of welder's goggles. Although even there's only like a certain number that you're supposed to use.
Right, so he was prepared. All right, Tom Giles, thanks so much for sharing your experience with us. Come and gone. Coming up, how one UK FinTech lender is providing postgraduate loans to international students. We'll bring you the very latest next. This is Bloomberg. Texting and crossing the street could not only be hazardous to your health, but also your wallet, at least in Stamford, Connecticut, which may become the second U.S. city this year to combat the problem with fines. Just last month, Honolulu adopted an ordinance to outlaw smartphone use by pedestrians crossing streets. Stamford's proposed cell phone crosswalk ban would have the police issuing citations of $30 per violation. U.S. pedestrian deaths have been on the rise, but there are no stats that show whether texting played a role in any of the fatalities. Now to a story out of the UK. One FinTech firm is looking to help students get loan, foreign students that is. For more on this company, I want to hand it over to my colleague Caroline Hyde out in London. Caroline? Emily, thank you very much indeed. Yes, indeed. Prodigy Finance has just announced it's completed a fundraise of $240 million, helping more international students, particularly from the emerging markets, receive loans based on projected earnings rather than historical credit. Now, the cash is comprised of a $40 million Series C equity round led by international VC firm Index Ventures, as well as a $200 million debt facility led by an unnamed global investment bank. Now, I spoke with Cameron Stevens. He's the founder and CEO of Prodigy Finance, and asked, well, how the debt portion will be used.
We provide loans to postgraduate students studying internationally. Why that's difficult is they can't get any sources of finance from local banks, because if you're coming from Ghana to study at Oxford or at Harvard, the US banks won't look at you because you don't have a credit record. The UK banks won't look at you. There's no product in Ghana. So you're basically someone with phenomenal potential at one of the top universities who has no access to funding. And so our challenge has been scaling the amount of funding that we have to lend through our platform. We're a fairly classic FinTech platform in that we're making loans to, in this case, international postgraduate students, which are funded by investors. Those include alumni from the universities and family offices, and more recently, a large institution, which is our first institutional round of funding coming in, this $200 million of debt. And that will be used to really expand the number of students that we're able to fund, as we sit with a situation where we have a huge amount of demand to cover. And really a challenge in scaling up the funding. So this will be directly used to increase our ability to fund more people.
And what sort of returns are we talking about here? How does a student go about paying back? What sort of interest rate are they paying?
So typically our students, it's a range of about 5 to 8% above LIBOR. And the return to the investors, we just charge a platform servicing fee and an upfront fee. And then investors are getting the balance. So typically an investor will get around sort of LIBOR plus 4.5. So it means a yield, if you think about sort of forward LIBOR, of about 5.5, 6% over the life of the loan. So students take about, typically they would go and study. They have a grace period when they're studying. And then they have about 7 years or 10 years to repay the loan.
What about potential risk credit ratings do you give to individuals? How are you doing the background checks on each particular student that comes and knocks on your door for funding? And indeed, have you seen any potential unreliability in repayments?
So this was one of the things when we set out, which was one of the most complicated things to get right. It was trying to understand, what are the problems the banks have in lending across borders? Because it seemed pretty fundamental. The whole bank risk model is built around you have credit data in one home country. You move one street across in London as a UK citizen, and a bank is going to think you are incredibly mobile and going to be worried about you. When you can move to Singapore tomorrow, you're still on LinkedIn, you're still on your social networks, and that sort of concept of location and risk has changed. So, but we had to think about, well, how do we assess people? And we're trying to do two things. We're trying to assess what is someone's ability to repay the loan, and then if they have the ability, will they actually repay the loan, which is fairly standard for credit. But for us, what that meant was we had to look at someone's future earning potential. What are they going to be earning after graduating from Stanford or Harvard in a particular course from a particular country? And so we built, a massive data set over many years with data we got from the universities to understand what is the earnings potential of this particular group of people doing a particular course. So we could calibrate a scorecard to understand what they could afford to repay and how much of a loan we could give them.
How, when you're putting the money to work to invest, in particular your technology, how do you continue to make it more precise? How do you continue to build it out? Are you looking at particularly AI and computer learning?
So we have a machine learning team, and you're trying to understand what additional data goes into understanding performance, and you're refining that as you go. So initially we built out our data set. Now we're getting more and more repayment data from our own portfolio. We started in 2007. So we started before FinTech was cool, and before it was even a term.
Yeah.
And so we're getting good data over quite a long time that we can start to refine our model. And absolutely machine learning is something for where we see in the future as we start to expand products and as we start to think about where we're going in the next 2-3 years will become increasingly important. But really sort of your base level is in place and has been quite tried and tested over quite a while. Now you're looking to improve constantly.
Where are you going in the next 2 to 3 years? You're already 118 countries where you're getting the students from. You're in Europe.
European universities, Asian universities, US universities? Is it just building scale across all those countries?
So we think about it in the fact that everything is really going global, despite some sort of nationalistic bluster politically in a few places. But generally, the world is going global. The internet is obviously global, but financial services is inherently local. And so what that means is, depending on where you are in the world, your access to financial services is going to be hugely differentiated in terms of what products you can be offered. And that's purely legacy and purely historic. It's because of how the bank models have been built to date. We think that that is going to globalize, and we are really the pioneers in that. So when we think about it, we're building the infrastructure to be able to look at someone wherever they are in the world and assess their risk, fund against that risk, and you can think about different products in there, from the most basic in terms of thinking about you've just arrived in London, no one will give you a credit card or even a bank account. You have 60 million people living outside of their home country or working outside of their home country as a starting point. And so how do you think about being able to service this globally mobile and increasingly globally mobile population without having this sort of artificial constraints of national borders?
Cameron Stevens, founder and CEO of Prodigy Finance there, who notably still sees an expansion in the number of international students, Emily, and a realisation of their economic importance despite the seeming rise of right-wing populist sentiment. Emily.
All right, Caroline Hyde in London. Thanks so much. Coming up, from Apple to Facebook to Amazon, tech firms are stepping up their spending on original shows and content. We'll break down the new media marketplace next. This is Bloomberg. A dash of digital dinosaur DNA is causing a UK video game maker shares to soar. Frontier Development shares hit a record high today after the announcement that they are developing Jurassic World Evolution for PCs and gaming consoles. The stock climbed as much as 19%, meaning shares have tripled in value since the start of the year. The company, backed by Tencent, hopes to announce another franchise project sometime in the next year. Well, competition in the streaming space is set to get even more intense. Apple's $1 billion in spending on original content in 2018 will allow it to produce about 10 shows. While it may seem like Apple is using its deep pockets to launch its original shows, it is entering a crowded field already dominated by Netflix and Amazon. Netflix will spend $7 billion on content in 2018. Here to weigh in, we are joined by Michael Wolff of Activate, former president of MTV Network. So with a number like $1 billion, Michael, how well can Apple compete in an already crowded market?
Apple brings a lot to this party. And they've already got devices. They've already got people watching video on their phones and on Apple TV and on their computers. But at the same time, and they've also got a lot of data. They know what people are watching and they know what people are doing. But at the same time, it's very difficult to produce hit TV shows. YouTube is using data to be able to decide what shows that they're going to produce. So, for example, they're doing a spin-off of The Karate Kid because they know people are watching old clips of The Karate Kid, or they're doing shows about dancing because they know what people are looking at. In Apple's case, it's not as easy as going to the video store or the content store and saying, just serve me up some hit series. It's very difficult. It's very difficult to know what to produce. There's an old line that in Hollywood that nobody knows nothing, which means that no matter how many times you've made a film, you may not know what makes the next film or the next TV show successful. So I think it's going to be interesting to see how Apple evolves, and at the same time, they're competing against a bunch of other people. They're competing against Facebook, and they're competing against now YouTube, and as well as other companies that are out there that are already well established in the TV business.
Right. Facebook soon to unveil a watch tab for original series. YouTube also spending big on original series. Of the two, you know, is it a toss-up in terms of who is better positioned to compete, or are you optimistic about them both?
It's hard to make the judgment based on their platforms. It really comes down to who's able to produce hit shows. And a lot of that revolves around talent, directors, writers, stars, people that they can put together. And then, of course, there's that bit of luck about what an audience will be interested in. both of these platforms, one of the advantages that they have, and especially Facebook, is that they've got really hundreds of millions of people in this country who are on a constant basis going to that platform. And so if nothing more, they're going to click on that watch button to see what's there. But when you look at an average of $3 million an episode, and you're talking about 10 episodes per season, it's gonna take a long time to burn through that $1 billion. And at the same time, it's going to take a while to ramp up. Once again, it's hard. You can't just go out and buy it. You've got to build it.
Right. All right. Well, we will be watching. Literally, Michael Wolff, CEO and co-founder of Activate. As always, thank you so much for joining me for the hour. And
Great
that does it for this edition of Bloomberg Technology. We will be back tomorrow. This is Bloomberg.